Hello again, Mark Espy, MarketTamer.com, also OptionsRevolution.com, and again we're looking at the SPX. I must remind everybody that all that we speak about here is for educational purposes only and never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Okay, looking at the SPX, very similar to the Dow. A couple other things to point out. I drew an internal trend line here, quite interesting and pretty significant. We have a swing high here, touched this swing high here, nearly got this swing high here, and then down here is actually acting as support for a touch here, came back up, and another touch here, almost exactly. So you can see if we extended this line down to the future, that would be a continuing lower low type of a situation. You can see here I drew this orange line between the troughs of the head and shoulder. We have shoulder, head, shoulder, and the trough, and it did not close below this line, although it did spend a good deal of the day below that line. We put in a hammer here, which is much more significantly looking than the one that we saw on the Dow. So this is a classic hammer here. It was put in on decent volume. So one might suspect that we're going back up, and it may in fact will go back up. But my sense is that we'll continue maybe to follow this trend line down, and the first area that we would test would be the swing low just below 1060. We're currently at 1071, so don't have that far to go really. Then we have this double bottom here at about 1040 to 1044, and then the swing low here at 1010, 1011 that was put in early June. We have the MACD crossed over, and we have continuing momentum with the histogram pulling away from the zero line, indicating more momentum to the downside. And we got another crossover, and it looks like the stochastics wants to head back down into the oversold area as well. If we don't continue down, the first area that we would look at is the retest of this double top here, which is actually the shoulder and the first shoulder and second shoulder, which is about 1100. Beyond that, then we have the swing high here, actually this little flat top here at about 1130, which if we extended this would line up almost exactly with the swing high from June. We then have a swing high at about 1170 and change from May, and then the top at 1220, which was put in April. I mentioned this before last week. The market prior to April was just very consistent, tight trading market, and then you can see here it's almost two different worlds and all of these huge moves that we've been having. So very, very skittish market since the April highs. So I do feel that we may have a bit more to go to the downside. We might hug this trend line going down. But we do need to respect the fact that we just put in this signal today, and that shows some bullishness. We should not forget this arrow is pointing at the crossover, the 50 simple moving average over the 200 simple moving average, which is extremely significant, and I pointed this out several times. I think that we need to pay attention to that, and for the longer term we could continue to go down. So I'm more bearish than I am bullish, although we are at an inflection point, but I would say that I'm about 65% bearish, and on the upside, 35-40% bullish. So we'll see what happens. It's kind of a coin flip right here, but I do think we're going to continue down a little bit further. Okay, we're going to go out over and take a look at the CompQ.